Thank you for joining us, Mr. Puri.
Pleasure.
Let me begin by asking you about the impact of the global recession on Indian banking. What has it done to spreads and the cost of funds for Indian banks?
I presume you're talking about fundraising by the Indian banks overseas.
Yes.
See, most Indian banks don't raise funds for themselves, they are funded by deposits. And the only time that they are giving an overseas loan is if they have overseas funding available to them. During that period, I think for a temporary period, the spreads had widened a lot, largely for Indian corporates and also for Indian banks. But I think they've come back to normal and are now very competitive.
And how has it impacted demand for credit within India?
Demand for credit in India, what happened was that with the global slowdown, naturally there was an impact in India as well, with our GDP slowing from about 9 to 6 odd percent. So for a temporary period, which is about 6 months of last year, I think the demand did go down. We were growing at about between 24 and 27% in terms of credit demand, and that came down to sub 20. I think in the last quarter it has recovered, and we are expecting to see 20 plus growth in the coming year.
And what is the medium term outlook? And if you could also talk about those industrial sectors that are showing the most demand for credit?
See, medium term, the prospects for India are bright. I think depending upon what happens to global recovery and what we do about our infrastructure and subsidies and agriculture, there are varying estimates on GDP. But if you look at it, I think a GDP growth of somewhere near 7.5% is definitely a given, even if we don't fix our problems. But if we get our infrastructure right, and we get our agriculture policy right, and we get our GST right, and we get our fiscal deficit, which I do believe that there is a very good chance that we'll get it right, then a double-digit growth after 2 years is quite possible. So current estimates, neither the most optimistic nor the most pessimistic, are about 7 plus in fiscal 10, about 8, 8.5, 10, 11, and they're hoping for double-digit growth on the assumption that they would have been able to sort out inflation and they would have been able to make progress in sorting out infrastructure, subsidies, and the deficit. The budget has taken some good steps, so there's a reasonable chance we'll have double-digit growth within 2 years. As far as the sectors that are concerned, naturally one of the big boosts in spending is infrastructure. There's a lot of spending on agriculture. There's spending on health, food, and education. Once you have this, you have the add-on demand from cement, steel. The consumer, the FMCG are doing well. Most of the transportation industry, cars have had a record year. I think I was talking to Anand Mahindra, and this has been a record year for Mahindras in their entire history. So that's been doing well. I was talking to Munjal of Hero Honda. They've been doing phenomenally well. The FMCG people are doing well. So it's reasonably broad-based.
I'm sure there are many things to learn from the US financial market overall, the regulations that have come in place after the crisis. Is there anything that the Indian banking sector could learn from that, especially when it comes to things like over-leveraged consumers?
I think there are a lot of things to learn and, in terms of not making the same mistakes. But what we have to realize is that what happened in the US is probably a multiple of things. It's not just the over-leveraged consumer. It's the US government spending way beyond its means because the dollar was a reserve currency. It's the exotic derivatives that brought leverage into the market, as well as a lack of understanding of who was responsible for what and what the actual value of the assets were. So there were a whole lot of things that came through. Also, this notion that you could have the markets will determine everything in a fair manner and will distribute risk and will price it right. That proved wrong, and when intermediation and regulation became a domain of the open market, it was a free-for-all. So when you look at it and you look at what caused the crisis, it was a lot of financial intermediation moving outside the regulatory ambit, number of players not clearly defining their roles, high leverage into something that banking is not that complicated. I mean, it's financial intermediation. People who have money want to give it to people who don't have the money, but naturally the people who give the money require liquidity and security, and so that requires management of credit, market, and maturity risk, and there are people who were supposed to manage it. But the opaqueness and what came into derivatives and who was selling what and who was responsible just resulted in something that in theory was supposed to distribute risk and give investors the appropriate tenor and return that they wanted. Didn't work. Even the mathematical models didn't work because human beings in a crisis react with a herd behavior, and other things equal don't work. Basis risk was all wrong. And so we did have a big problem, and you allowed borrowing on the basis of asset values going up, which not only created an asset bubble, but over-leverage for the consumer. Fortunately, in India, the Reserve Bank, though it's fashionable now to say that it was by luck and by default that they didn't open up, no, that's not correct. Well, what they didn't open up to was what they didn't understand, and what we also as banking practitioners did not understand, and now it turns out the people who profess to understand it also did not understand it. So I think the regulators played a major part. I think part of the regulation that people are talking about now, the previous governor, Dr. Reddy, when you talk about macroprudential guidelines, that's just systemic risk. And he had taken into account by adjusting risk weight, by adjusting the provisioning requirements, that you did not build up bubbles. So when we look at the Indian financial system, we're clearly looking at the fact that you shouldn't have too much leverage. You need to have clear definition of regulatory roles. All financial intermediaries must come in, and you must have macroprudential regulation that goes beyond only monetary policy.
India has not had a financial market crisis in a long time, probably not at all in modern times. There must be something that Indian banking is doing right besides the strong regulatory checks and balances.
Yeah, I think the banking system itself has been conservative, has been reasonably responsible. While not going overboard, they have met the credit needs. So I think crises normally come as a snowballing effect of excess leverage and borrowings during good time when you presume that nothing will go wrong. But the world knows that what goes up must come down. And so I think the bankers have been conservative too, which is a good thing.
Let's switch lanes to your own management style. In 2007, you were conferred the Asian Bankers Leadership Excellence Award. Could you share one big leadership challenge that you faced in your career and how you overcame it?
That's tough, actually. You know, when you look at leadership now, it's changed very substantially. So leadership now is more first among equals. And so the way you define it, it's not so much a one-man show. It's a question of setting, you probably provide the vision, you jointly set the strategy, and you monitor the execution. So I'd be taking too much upon myself if I said that my leadership did it. I think it was a joint team with me being the first among equals. You have a lot of challenges naturally in a day-to-day environment, but I wouldn't be able to describe just one as a challenge. We went through multiple. When we started, you didn't have connectivity, but we wanted an online real-time bank. When we started, we wanted to go into consumer banking, but traditional consumer banking didn't exist in terms of, as I said, you don't have a credit bureau, you don't have history, you don't have probability of default. And in retrospect, probably it was good. because we didn't depend too much only on figures and exercise judgment as well.
You've been a big advocate of rural banking and also introducing new technology in banking services. I want you to talk about the opportunity that exists in rural India, and yet it is not an easy market to penetrate simply because of the lack of infrastructure there or adequate infrastructure. And you also have the state sector that is very dominant there. How do relatively younger private banks like yours use technology to innovate and build market share rapidly in those markets?
See, technology is very important where you don't have infrastructure because it provides you distribution reach. And that gives you the ability. And frankly, even if you take the state sector, if we have to put up a bricks and mortar network across the length and breadth of the country, it's not going to be economically viable. So we need to look at different ways of being able to deliver. Not only is it not economically viable for us, it is not beneficial because of the last mile problem, even to the rural consumer, because if he has to travel to bricks and mortar, it's going to be too expensive for him. In addition, you will never be able to build up credit history which will allow him to become a credit-worthy customer and create viability for himself financially. So what we have been looking at is the fact that somewhere between 300 and 450 million people still live in the rural areas. Prosperity is coming slowly but steadily, but we need to be able to substitute the money lender. We need to be able to provide him finance which he is able to repay. Just providing finance that he can't repay is not fair. So we're looking at microfinance, which creates financial viability by providing him production, marketing, and raw material support coupled with finance, i.e. creating a viable business. We're looking at providing finance to the individuals where they've been going to the money lender against either appropriate collateral, because we do want him to be honest. We want him to inculcate the habit of paying back. So we're providing that as well. We are taking jobs into the rural areas. Rather than having everybody come to Bombay, we want to go out and provide jobs there. We do believe that we will be able to create, and in fact, we're almost there. Our microfinance initiative is now making money. We think it'll provide return on equity in 2 years. We think with our project that we have to tie up with that we've tied up with the telecommunication companies, we will be able to take banking on the mobile. This will get further security when you get the 3G coming in. We will be able to take it right into the interior. There is enough collateral in terms of gold and other such instruments available, even for the lower middle class, and that's coming through. So even if, say, 20-30% of these people come into what is defined as the bankable world today, that doubles your market. So it's a major opportunity. We look at it two ways. One, it is our paying our dues to society. Two, I think we're creating models that will enable us to compete very, very effectively. Say in 2-3 years from now, if I can create a profitable business in microfinance, which we think we're almost there, that is an average loan size of 15,000 rupees, which is what, $300. If I can create a viable business on a ticket size of $300 with a cost to revenue of less than 40%, I can take that model overseas and actually change banking. So these are the models that will ultimately come, which will completely change how you deliver, what price you deliver, what is the size, what segment you deliver at. And that will give you the ability not only to have models in India, but these are applicable in any country with a large landmass.
This market is very complex, and you've set out very beautifully how you want to, what you want to achieve in those markets. But increasing penetration in those markets is more easily said than done. We know that all the loan forgiveness programs so far have really impacted only organized sector loans, banking loans. Money lenders' loans are not forgiven by government programs. We've also seen that most of the farmer suicides, at least whatever anecdotal information we have, are caused by loans they owe money lenders, not organized sector banks. If you were to be an agent of change? You have, of course, your shareholders and your and your profit maximization target. But if you were to be an agent of social change, like the state sector banks assume that role, where would you begin if you were to bring to bear your leadership qualities and vision?
If you look at it, I think this business of loan waiver is overdone. The loan waiver was for the people right at the bottom of the pyramid, and the proportion waived, whereas I'm not advocating that it's a good idea, it is a bad idea in terms of creating a precedent, but I think more is being made out of it than necessary. It is something really at the bottom of the pyramid, and the percentage of loans involved is some 0.001%. So I don't think we should get stuck in that, because normally what is picked up is the way the newspapers report it, and that's a bit sensational. But on the ground, it's not that much of an issue. Definitely, it is our intention to be an agent of change. We brought the microfinance rate down substantially compared to the microfinance institutions. We are today the second largest lender in microfinance after the State Bank of India. We've taken our products into the interior as a combination between the telephone, between using distribution channels or dealing with the cooperative banks, appointing our own agents. So I do believe that if managed properly, which is a question of cost, dealing fairly with the people, we find that the people in the rural areas are very happy to deal with us. Fair, transparent, and clean dealing, reducing costs through using alternate delivery channels, ensuring that you can also reduce operating costs to having appropriate technology and scale. I think we can make a very sizable contribution. We're looking to make 10 million families financially viable at the bottom of the pyramid in the next 5 years. That's 40 million people. And that does not include the regular lending that we would do to the top 20% of those 500 million people who will become prosperous with the trickle-down effect. We also see a substantial change coming in through, if we were doing 2 kilometers of road and we're doing 10 kilometers, that makes a major difference. If you had 40 airports and you have 90 airports, that completely changes the scale of the market available. So it's an absolutely fantastic opportunity in financial services. In my view, the best opportunity in financial services globally.
We've seen in recent years the rise of strife within society, the gap between haves and have-nots, the Naxal problem, insurgencies. What does all that mean for the agenda for Indian banks?
I think it's not so much the agenda for Indian banks, but it's definitely...
One speaker this afternoon talked about civil disobedience in 25 years in India, and it was very ominous.
Yes and no. When I said it's not so much the case for banks, banks are just one component of society. Is it an issue for society? Absolutely. I think the fact that you cannot have 30 or 40% of your population below the poverty line is an absolute given. The fact that you cannot have two Indias and continue without some kind of civil disobedience at some point of time is also a given. The fact that you cannot get elected today in large parts of the country unless you benefit them is also a given. So I think politically, socially, economically, this is an imperative. And the self-interest of most people will ensure that what has not happened will happen. So I do believe that politically we will see better schemes. We will have a better direction of subsidy. We will have better schemes to make sure that the underprivileged are taken along with the people who are doing well. We will see that this will create a market of its own. We will see better distribution. So I think this will come because each part of society recognizes that this is not a tenable situation.
Well, sir, thank you so much for joining us.
Pleasure.
Enjoyed your conversation.